The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome this Monday morning to Squawk Box Europe. I'm Steve Sedgwick with Karen Cho, and these are your headlines. Gold crosses $5,000 per troy ounce, actually getting as high as $5,100 at one point, as investors continue to seek shelter from global risks.
President Trump threatens 100% tariffs on Canada if it, quote, makes a deal with China. But Prime Minister Mark Carney says he has no intention of pursuing a free trade deal. The US government eyes a partial shutdown as Democrats prepare to vote against a package to extend funding for the Immigration and Customs Enforcement Agency after its officers kill another person in Minneapolis. Well, we're back out of the cold. Quite a geopolitical event that Davos was, and it feels as though we've rolled onto this week as we talk about Canada and China. Now the US pushing back against any agreement between those two nations. The surge we're seeing in the safe haven trades from gold to silver to platinum. It feels as though what we saw in Davos has rolled across to investment markets. The safe haven trade's still there because of the geopolitics, but we're also going to get a huge focus from this week on the corporate earnings and what that means in terms of the AI story.
Yeah, there's a lot going on, isn't there? Look, why is Donald Trump targeting Mark Carney again? Is it because of a trade deal with China, which apparently he endorsed back in October, said, yeah, go ahead, try and get yourself a trade deal with the Chinese? Or is it because Mark Carney got better headlines than him in Davos? It's a fact. Mark Carney came away with a lot of people, and you and I and Dan sat on set and say, who had the best Davos? And we all said, in fact, even before I can get a word out, you guys, yeah, Carney. And Trump was not seen to have had the best Davos in terms of the rest of the world appreciating his greatness. So that goes on. Plus the fact that dreadful events in Minnesota, Minneapolis, once again, appalling events as well. And of course, we hope that there'll be due process and we can get to the bottom of what happened again. But another shooting as well. So the president is facing enormous domestic pressures as well. Of course, and now the Democrats are potentially looking at maybe creating another shutdown because of the funding towards Homeland Security and ICE and what have you. So the president's got domestic issues as well. He's hitting out internationally again. This is his modus operandi as well. Find an international bogeyman to distract from what's going on domestically as well. But you're absolutely right. There's a lot going on, a lot going in markets. Just one word on the safe haven trade. And we've talked a lot about gold and silver. And I have my strong opinions on this one as well, but it is extraordinary, the rally. It is historical, the rally. We can all agree on that. But I just want to draw viewers' attention to a brilliant piece of copy that I missed last week. It's from our staff writer, Liz Napolitano. Liz Napolitano has written a great piece on CNBC.com. There is another reason why Bitcoin is trailing gold and not acting as a safe haven. Because, of course, once upon a time, gold in the doldrums, no one would touch it as a safe haven. They all love Bitcoin. It's a really brilliant piece and something I had nothing about, and it's down to quantum computing.
Oh, interesting.
Because the quantum computing, apparently, and I'll just steal a bit of Liz's thunder on this one. It's a great line. I'll take one line from it as well. Quantum vulnerability, I've never heard of it, I do know now, refers to the risk that high-powered computers could be used to steal passwords or private keys to digital wallets holding investors' bitcoins. People are beginning to worry that the amazing surge we're seeing in quantum computing will make the security surrounding a lot of things in this world, but especially holding crypto, especially vulnerable.
Fascinating. The one other thing we haven't plugged into the conversation this morning is the element of coordination, and that is on foreign exchange markets. We were talking so much about the geopolitics last week, but there are consequences from some of these policies domestically. And this morning there's a huge focus on Japan as to whether there's been some sort of intervention in the currency. We had pushback from the Prime Minister recently about trying to intervene in the currency. And now there's talk about whether there could be help from the Americans here, which I think is fascinating, whether there could be some sort of Mar-a-Lago accord going on, whether it's with the Japanese currency, with the South Korean won. So that is an interesting consequence of the strength we're seeing now in the US dollar. I want to push on to the gold, silver, platinum trade again. Further conversation that a lot of the central banks may be bulking up on some of those gold holdings to diversify away from the US dollar. That has again put further bid in the market for gold prices, and we've climbed well through that $5,000 handle. So very much the speed, the pace from the 4,000 handle to 5,000, and morning session very strong there. Silver, platinum prices also on the front foot. To the Bitcoin trade, and to see how we are perched in the early part of this session, more than 1% to the upside, and the 87,700 level has been cracked, as you can see. To what we're seeing across on those Asian markets, the context here for the equities trade. Japanese stocks are trading weaker, 1.70% in the red. Hong Kong market giving back 2/10, so more modest levels on that market. Fairly flat for the Chinese stock market. South Korean names are in the red, down 0.8%. We are picking up on the back of a negative session too on Wall Street, so those Asian markets are giving back territory. Now, I mentioned this a moment ago. Currency markets are on guard for the possibility of Japanese government intervention in the yen. The currency surged Friday, marking the sharpest rise against the dollar in nearly 6 months. Prime Minister Sanae Takaichi pledged to respond and take necessary steps against speculative moves in the market. And the European markets this morning, as we look to get going for the Monday session, on the back of what was a negative day Friday, a subtle retreat for the Stock 600. Markets this morning, again, looking somewhat mixed to flat. We've got the FTSE 100 perched to fairly flat, along with the French market. The Xetra DAX expecting to give back faint territory, along with the Italian market. Now, early this morning, former President of the European Commission, Jose Manuel Barroso, gave CNBC his take on Trump's presidency and its impact on relations with Europe.
We may like him or not, but he's the great disruptor. He has changed the grammar of politics, not only internal politics, but international politics. He has changed the grammar of political communication, going against the mainstream media, going even above the mainstream media. He has changed the protocol of diplomacy, the conventional diplomacy, sometimes being more tough with the allies and friends than with opponents. So it's a complete new age we are living. Of course, that takes time to adapt. But in Europe, I think, in its very idiosyncratic way, Europe is adapting.
Joining us now is Rebecca Homkes, who is faculty at London Business School, faculty Duke Corporate Executive Education. Rebecca, thank you so much for joining us.
My pleasure. Thanks for having me.
Our heads are still spinning after Davos. We just got off the mountain. So much geopolitics. And as we come back, we've got corporate earnings as well rolling across the tape. What are you looking at the most in terms of consequences here for the markets going into the rest of this year?
Yeah, I think there's a couple of things, Karen. I mean, one thing we are not having the debate about, does Davos matter, as we often have the Friday or Monday after. I think that's at least one thing that we're aligned on. You know, the theme of Davos this year was the spirit of dialogue, but
the biggest meme of all time. We're all just laughing our
I was
socks
trying to be
off
polite
that,
about it, Steve.
with respect to our good friends at WEF.
Here's what I'd say. CEOs who were there to make deals, right? That might have been the theme, but if you went, you were there to make deals. Whenever these things happen, we have the main stage, which become the talking points. The real action happens in the side rooms. A lot of deals happened last week. And that was to be expected, but I think maybe the most consequential for executives that we've seen in over a decade. You know, geopolitics and AI were supposed to dominate, and they did. But I think it was a much more nuanced and different and albeit volatile conversation than we thought we would have.
Well, we were on a roller coaster around Greenland and what it meant for allies, the relationship around NATO, the alliance, and the transatlantic relationship. I think on the back of that, even though some of it got solved and some of the aggression was parked by the end of the week, it felt as though corporates were again saying, look, supply chain diversification matters. We're not talking about a China +1 strategy anymore and navigating trade headwinds from Trump. We're talking about an uncertain environment. Was that coming through to you as well?
Yeah, and you know, Karen, we've had supply chain volatility since 2020. You know, post-COVID was a massive supply chain shock, and most executives have already tried to build more robustness into their supply chain, diversifying supply chain partners. When the tariff threats happened last year, we saw even more of that. The challenge is you cannot switch a supply chain in a couple of weeks or even a couple of months. These are often multi-year aspects. And what I'm seeing most right now is continuity is trumping cost. So you are actually paying more for certain supply partners, especially if you're more nearshoring, than saving the money because you can't take the risk of something being stuck. So people are saying, look, regardless of what happens with the Supreme Court, there's still always a risk that the geopolitical volatility will stop the supply chain down. So continuity is trumping cost across the board when it comes to supply chain robustness.
Rebecca, your CV is extraordinary. You also served as a White House President's Council of Economic Advisors as a fellow there as well. So, and you are an expert on strategy. And by the way, thank you for the book. I will absolutely have a look at Survive, Reset and Thrive, which is one of Rebecca's books as well. But in terms of leadership strategy, I want to see how this works as well. The president is brilliant at public relations, there's no doubt about it. He is brilliant at bait and switch. If you want to be looking over here, what the president's saying, he invariably doesn't want you to look over here, and vice versa. His economic record is under scrutiny like it's never been before as well. He says that inflation has been sived compared with Biden. Others will beg to differ, depending on what stats you're looking at as well. What do you think about the Trump strategy now and up until the midterms? Because at the moment, this aggressive foreign policy is not playing out brilliantly with his base.
It's not. And look, first of all, when Trump's speech last week, he announced the U.S. was in this golden age. One thing is true. The GDP is blowing out any estimates I had or any of my colleagues had. We were over 4% in Q3.
Yeah, there was a lot of us who were wrong.
Yes, we were wrong about. However, digging in, there's a lot of caution flags, right? We are in the most jobless productivity boom we have seen since some of our great crashes in the previous, and we're not talking about that enough. Inflation has not been tamed. We have been over the Fed's 2% mark for over 5 years, going on 6. And PCE came in last week at about 2.7, 2.8%. Now you can say, hey, that was an estimate. It's what I call the tolerance range of consumers, which is under that 3 mark. But if you dig in, Steve and Karen, what went up was food and shelter. Exactly what consumers cannot afford to trade away from. So these numbers digging in, if it was just food and shelter, what consumers need, we would be well over 3%. So this economic record is poor. Now, the president and his colleagues are trying to do some things to address this affordability agenda, but they are not addressing the K-shaped economy. They're not truly addressing the structural issues underlying the economy. And I think that's why we're seeing a lot of these distracting, almost chaotic techniques being thrown at the market. We've got midterms coming up in a couple of months. That will change Congress's balance.
It does feel like Keir Starmer a lot at the moment, or a desperate Tory government, to be apolitical on this one, on this side of Atlantic. But that's really interesting. And hitting out left, right and centre. The credit card debate is a brilliant one as well. Don't get me wrong, I think credit card rates are extraordinary and terrifying and awful for people who have to carry on that debt month by month and pay those 20% plus rates. But if you cut rates to 10%, it's going to actually cut out a lot of people at the bottom of that K from revolving credit as well. And they're going to have to go to terrible places to find their money compared to the credit cards as well. The president must know this, though. Is he just trying to grab the headline?
You know, I'm not going to speculate on all of the president's underlying motives. What was interesting about last week was this was the first time we've seen a CEO actually speak out against one of these.
Are we talking about Jamie Dimon?
Yes, when Jamie Dimon came out and said this would actually be disastrous. He's saying, hey, look, it's not my business.
Is that why Jamie Dimon's now got a lawsuit against him?
Park that for a minute. JP Morgan is saying, we'll be fine, right? But, others, because we have a very diversified business, others will not. Maybe they'll try it in different aspects, but capping that, as you say, Steve, will just mean that the lower end of the curve will not have access to credit, which will just exacerbate all these issues that we're finding right now.
So the interesting part here, I was having a great conversation too on the sidelines of Davos with one of the biggest recruitment agencies in the world. And the boss of that company was saying to me, look, this K-shaped economy, it is very evident if you look at the skills below the surface, and that's the graduate level appointees and the high school graduates. So the difference in the university and the high school is that it's very similar. So you're not seeing just graduates being upended by the AI story. The high school graduates and the non-AI jobs are also being disrupted. He said to me, it is the economy. It's not AI yet. So what happens if AI productivity comes into the mix as well and disrupts even more jobs from here? What does that mean in terms of the challenges?
Well, it's a good question because it's almost lazy to blame AI for the current jobless boom that we're having right now. There are a handful of companies who have actually done layoffs due to AI. And I can't emphasize the significant, often hundreds of millions of dollars of investment you need to make in your infrastructure and capability training and governance in order to afford yourself to do that. We are, however, Karen, seeing a couple of things when it relates to AI. We are seeing a reinvestment. So given the current heightened economic pressures, executives are reallocating funds that might have gone to building teams, to fueling their AI investment. So there is an effect, but it's secondary. And we're also seeing a pause, is that executives, when someone retires, when someone leaves, roles are not immediately replaced like they might have been a couple years ago. So that's why we're calling this the no hire, no fire. Mass layoffs are not happening, but there's this pause here.
So let me tell you. Oh, sorry, did you want to carry on?
No,
I think that's fascinating, and I hear what you're saying, and I think you're right. People are more cautious on the hiring. There's certainly, again, everything you two just said. But then that doesn't tally with the protestations, the clamour coming from the people who are developing new AI product about how it's going to be ubiquitous and the diffusion is going to be absolute. It's not even going to be a trickle, it's going to be a tsunami as well. So something's wrong here. Either AI is going to be the game changer for everything, or it's not. Someone is very badly wrong here. And if it's not yet, or not in the near term, or not actually somewhere we can see on the horizon, then the spending on AI could be catastrophic for a lot of things, and certainly for the stock market.
You know, Steve, this is not a black and white world. I know you would love me to say it's going to happen or it's not.
It's not
going to be a shades of gray here. There's a couple of things. Now look, let's go back to Davos last week. What did Microsoft's CEO say? That this is going to be a bubble unless there's more widespread adoption, which there is not right now. I can't emphasize the majority of companies are not anywhere near the level of AI adoption to justify the investment and returns that we're making right now. Because actually transforming your organization to be AI first is an end-to-end complete transformation that really goes against a lot of current structures. You know, Uber's CEO last week gave a speech that got buried in all of the headlines, where he said that they learned that they actually had to scrap their entire tech platform and start over because they realized they could not build an agentic workforce on top of the current one. Their tech platform is a decade old versus the 40s, 50s years of many of them. So
just pick up on that point. So if they have to scrap their platform and start again, that could be a negative for adoption for some companies, but it could also be even bigger CapEx spend, OpEx spend for some companies if they're starting from scratch.
And that's even more investment that needs to go in, which pulls away here. If you think about, I call them these 4 chunks that organizations need to invest in. The challenge is that you need to do all simultaneously. You need to do a massive investment in your tech platform. You know, the majority of companies grew inorganically. You know, many mergers and acquisitions over the years. We've got tech platforms and data infrastructure that barely talks to each other in a non-AI world. That needs incredible investment. You need to get a whole new governance and responsible AI system in place. That's another chunk of work. Then you need to do organizational-wide capability and upskilling. You know, most companies are stopping at hands-on keyboard for a couple of hours. This is complete retraining how leadership approaches creating value. And then you've got to link it to your strategy. Those 4 planks need to be done in parallel. You know, we're used to organizational structures that is sequential. I do step 1, then step 2, then step 3. You need to work on all of these 4 streams in parallel pathing while trying to grow an organization, very heightened economic pressure. The challenge is real.
Rebecca, let me go back to, and always a fantastic conversation. I feel like I'm in a lecture hall as well sometimes. I can write this down, what the 4 steps, you know. Don't test me. But in terms of, you mentioned Jamie Dimon was the first CEO, first consequential CEO,
in public,
I would say.
Consequential in public.
And we couldn't agree more. But do you think actually, as the president's record on the economy comes under more scrutiny and more CEOs feel less enamored with the deregulation and more worried about other factors that are going on as well? And I noticed there was a load of Minnesota-based CEOs from big companies who have criticized the situation going on in Minneapolis as well. Do you think more CEOs are going to, I know they try to avoid it like the plague, they just don't want to be political, but do you think they're actually going to get more on the stump and more public about their criticisms of the administration?
You know, not in the near term.
Okay.
Not in the near term. Is one of the other side conversations in Davos, which you might have heard as well, is a lot of the private conversations were about CEOs sharing how they were avoiding being under the administration's ire and how they were dealing with the administration. And the fact that this is actually taking up executive mindshare and bandwidth is fairly significant. Now, remember, we do have a midterm coming up in a couple of months. We'll have a new Congress. A year from now, we'll have a completely different Congress, maybe, if current polling holds, and these things can always change. So I do think that we're seeing a bit of wait and see, right, to kind of stay under the cover. Now, if the administration continues to intervene as they're trying to get shares in private companies, as they're getting involved in acquisitions, to the credit cards, we might see more, but it would take more of a coordinated effort, which we don't really tend to see that much in the American executive base.
I'll give you a great example. One very big CEO, who we did interview actually, but a very big European CEO, he said to me, I've been invited to this Trump business meeting with business leaders, 150 top CEOs. He said, I've got a bilat. I think it was with the Belgian Prime Minister or something. I dare not miss the Trump thing in case I get myself on a list for not having not so much kissed the ring, but been in attendance and listened to his greatness. So he was terrified. And he was going to miss a bilat with a European leader so that he could be one of 150 businessmen in attendance with Trump, just in case he ended up in trouble. It's extraordinary.
And these things happened all week. I mean, Jane Fraser missed her own cocktail hour because she didn't want to leave Trump's event early. And we saw many, many stories like this happen last week, which goes back to this administration is getting much more involved in the private sector. Like it or not, that's not the question. It is happening. So as an executive, you need to now govern and think differently about how you engage with the administration.
Rebecca, lovely to see you. Thank you very much indeed. Thanks for the book.
My pleasure to
Much
be here.
appreciated. Rebecca Homkins, who is a faculty at London Business School and faculty at Duke Corporate Executive Education as well. Actually, just a quick question. How's Miami at the moment? Because the weather on the eastern coast is terrible.
Miami
is Miami okay?
is beautiful, 20 degrees centigrade,
so
and
it's missed still, because it's gone quite the way down the eastern seaboard, but not that far.
Yes, now we are getting a cold sweep there. It's going to be about 12 degrees, so all the locals are completely bundled up. But otherwise, we're doing great down there.
The pictures coming out of the eastern seaboard are quite extraordinary. We wish all our American friends to stay safe, lots of food, and just watch CNBC.
Yes. Coming up on the show, as France's government survives 2 no-confidence votes, and with the budget looming, we'll be looking at what to expect in coming weeks. Plus, signs of progress after trilateral talks between the US, Russia and Ukraine and the UAE. We'll discuss what comes next with Dan in Abu Dhabi. And following the US capture of Venezuela's President Nicolas Maduro at the start of this month, we're joined by the Venezuelan political leader and pro-democracy activist Leopoldo Lopez at 8:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
President Trump has threatened to impose a 100% tariff on Canada if it agrees a trade deal with China. In a post on Truth Social, Trump accused Canadian Prime Minister Mark Carney of trying to make the country a drop-off point for Chinese goods. It comes after Carney warned in his speech at the World Economic Forum last week that the rules-based international order was facing a rupture. Elaine Yu filed this report.
President Trump has threatened Canada on social media, warning Prime Minister Mark Carney against making Canada a drop-off port for Chinese goods into the U.S. He said China will eat Canada alive and went on to threaten 100% tariffs against all Canadian goods going into the U.S. As you'll see in the Truth Social post, he also insulted the Prime Minister, calling him governor. This threat comes after Canada reached a tariff truce with China during Carney's visit this month. And from March 1st, Canada will allow a number of Chinese vehicles at a 6.1% tariff, down from 100%. And in return, China will remove 100% tariffs on Canadian canola meal and reduce tariffs on canola seeds to 15%. Now, the stakes are high as the U.S.-Mexico-Canada Free Trade Agreement is up for a review this year, which has provisions around negotiating free trade deals with non-market economies. Carney has said he has no intention to pursue a free trade deal with China, and that what they've done is rectify some issues that developed from the last couple of years. The Canadian Chamber of Commerce also said a structured and stable relationship with China or any other country like Indonesia or the UAE are not to replace their deeply rooted relationship with the U.S., while citing a recent study that said American consumers and businesses bore about 96% of the cost of tariff increases. Now, this threat also comes after Mark Carney's speech at Davos, where he said the world's middle powers must act together to resist coercion from the world's largest powers. But But it's also worth noting that Trump actually supported Mark Carney on a China deal earlier this month, saying that's what he should be doing and calling it a good thing. So it's hard to say if this will be a case of taco, but all eyes are on how various countries balance their ties between the U.S. and China, with the British Prime Minister Keir Starmer also expected to visit China very soon with a high-level business delegation. For CNBC Business News, I'm Elaine Yu in Hong Kong.
India is reportedly planning to cut tariffs on cars imported from the European Union to 40%, down from as much as 110%, according to Reuters. That level could then be cut to as low as 10% in due course. It reports the two sides could close a deal which would be the basis of a major free trade agreement as early as tomorrow.
Okay, France's government has... Here we go again. Maybe a new year, but it's the same story. France's government has survived 2 no-confidence votes after the Prime Minister, Sébastien Lecornu, invoked Article 49.3, well, we love that one, don't we, to push through parts of his budget. It was used after Lecornu failed to find agreement amongst parties for his budget proposals. Charlotte joins us now. Charlotte, the most important thing we need to discuss is the Pacific SO1 model from at 659 euros per pair from Henri Julien. We'll talk about the budget in a moment. What the viewers really want to know is about these glasses and how their website crashed because Macron wore these really cool Tom Cruise glasses.
Funny, and diplomacy is a funny beast. Sometimes you just need an accessory to get all the front pages.
Everyone Googling furiously to find out where they're from, yeah?
Yeah, at least it was a French company, so they had been careful with that, making sure it was a French company doing the glasses for the president.
It takes 4 months to make every handmade pair. Really?
Well, there you go. You have to justify several hundred euros for a pair of sunglasses. None.
Okay, let's get to the boring bit. Le Cornu, 49.3, tell us all about it.
Yes, and he has survived many no-confidence votes, but this one is particularly important because maybe showing the sign that we're coming to the end of a political deadlock that has been lasting 4 months, the first part of the budget being voted and the government surviving
the end of political deadlock if you go ahead with 49.3, which avoids the vote, which basically is just doing it without the vote, isn't it?
Yes, but the 49.3...
how's that breaking deadlock?
Because the 49.3 then opens the door to a no-confidence vote. It allows parties to table no-confidence vote off the back of it. And he has survived 2 of those confidence votes that were tabled by the far right and the far left, and that was not a given, but here again he survived those thanks to the support of the socialists. There are only 66 MPs in parliament. They're incredibly important, those that did not support these votes on no confidence. It was a close call, only 19 votes, but the government surviving this first part of the budget vote there. And of course he had made some concessions, Le Cornu, to the socialists in particular. He clamped down on freezing the government spending outside of defense, preserving some funding on some welfare, climbing down on eliminating tax breaks for pensioners. A key one as well for when you look at business, you had this one-off tax that was supposed on the largest companies last year that raised 8 billion euros. It was on 450 companies last year. This year will be on 300 largest French companies. So, this one-off tax will be not just a one-off tax. So some climb downs there. But here again, the message from the government is that, look, the political instability and uncertainty has a cost as well. So they had to make some compromise, a very imperfect budget, but at least it looks like there might be a budget. So here again, we know that this has weighed on French assets. The CAC 40 has been the underperformer last year in France. We saw the moves on the French debt. Actually, we saw some relief on Friday after the government survived these votes of no confidence. French debt rallying and the spread with the bond falling at its lowest level since Macron called that snap election. Of course, created this very divided parliament back in June 2024. So some relief here that maybe the political uncertainty is going away. Key moment, of course, because we are just a month and a half before a mayoral election. That will be the final electoral test before the all-important presidential election. So getting this out of the way, the budget, the political uncertainty, whether there will be a new snap election, getting all this out of the way, allow all the parties to focus on the bigger picture, this next election coming, and the big one next year.
Yeah, still the big elephant in the room as to whether France can get its budget deficit down. So it's going to keep on spending at the current level of the 5% of GDP. It has to make headway over the next few years. If it doesn't, then the bond markets are going to react, aren't they? And some of the parties are going to get involved when we're back to square one.
Yes, and they were targeting 4.7% of deficit for this year from 5.4% last year. Now it looks like it will be closer to 5% because of the multiple concessions that the government had to make. But here again, the message was that, look, baby steps, better than no steps at all. And here again, going in the right direction, but it will take longer. So here again, we heard from Villeroy de Galhau, the governor of the Banque de France, saying, look, you need to do more cuts on the spending, because the spending is not being adjusted enough, and further down the line the issues might come back. But at least short term, there is a bit of relief that there won't be a snap election straight away.
The bond markets are going to need their own shades if this continues on. Just put that layer of protection on.